In its fight against inflation, the RBI has hiked the repo rate 6 times since May 2022, taking the repo rate from 4 to 6.5%. Surprisingly, it hit the pause button in the latest MPC meeting, keeping the rate unchanged at 6.5%. Now, this was on the back of inflation easing from a high of 7.7%. Offering some respite to the RBI, the latest March inflation data, which was released yesterday, dropped to 5.66%. The current level of inflation is within the target range of the RBI, which targets an inflation rate between 2 to 6%. Now, the softness in the inflation data is majorly because of a favorable base effect. As most of us are aware, March 2022 was the first month of the Russia-Ukraine war, which inflicted an inflationary shock on the global and Indian economy. The inflation numbers were high during these months. So the high base last year is one factor behind the inflation easing for the month of March. Now, apart from a favorable base effect, the relief also came from a moderation in food inflation. Core CPI, which excludes the more volatile food and fuel prices, is also on a downward trajectory. The elevated inflation rates that were seen in the beginning of 2022 are now showing signs of slowing down, although it's partly due to the base effect. Now, despite this, the reduction in headline inflation is positive news. Additionally, the core inflation rate, which the central bank has been focusing on, has also shown a decline. Now, looking ahead, inflation may be further eased by decreasing commodity prices, the lag impact of monetary tightening, and the high base effect. The NSE Indices Limited, a subsidiary of NSE, has recently launched India's first ever index, which tracks the performance of the real estate investment trusts and infrastructure investment trusts that are publicly listed and traded on this exchange. Let's discuss this. Real estate investment trusts and infrastructure investment trusts are investment vehicles that own revenue-generating real estate or infrastructure assets. For example, a REIT is a company that owns office buildings, shopping malls, apartments, hotels, resorts, warehouses, which are revenue-generating assets. Now, the revenue generated in the form of rental income is distributed as dividends and interest among the shareholders. Now, when you look at the performance of these investment vehicles, it has delivered a CAGR of around 10.5%, while the Nifty in the same period has delivered returns of about 12%. Now, the interesting point to note here is that there is a massive divergence between the price return and the total returns. In simple terms, this means the price appreciation or the price return is 0.2%, and only when you consider the dividends and interest payments, it delivers a total return of 10.48%. Now, the motive behind introducing the index is to provide market representative benchmarks for the asset classes as it is for other categories. As of now, the market for these instruments is still developing, and the inclusion of an index could be a good option for investors to invest in a diversified portfolio rather than bet on a single REIT or infrastructure investment trust. Now, apart from this, it will also bring transparency, accessibility, and consistency to make more informed decisions for an average investor. So, what does these news mean for you?
Inflation is on a downward trajectory and could be further eased by the lag impact of monetary tightening and a high base effect. However, any rebound in global crude oil prices due to production cut in major oil-producing countries could likely pose a threat. This will have an indirect neutral impact on you.
The introduction of this new index is a positive move and shows the maturity of the Indian stock market. For investors, this would bring a number of benefits like benchmarking, diversification, transparency, and consistency. This will have an indirect positive impact on you. While I say this is me, Merlin Susanna, signing off. Take care and stay invested.
Did you like watching this video? Then download our app Informed Investor to watch more such informative and interesting videos.